Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 4th of April. Solid US jobs data fall short of changing Fed rate path views. On Friday, the US employment report for March showed that the nation's jobs market continues to improve and is drawing back into the labor force workers who had stopped looking for employment. Non-farm payrolls rose by 215K from 245K previously. Average hourly gains accelerated on a yearly basis, while the unemployment rate ticked up due to a rise in the labor force participation rate. The report confirms Fed Chair Yellen's comments last week that there is scope for further improvement in the jobs sector, which may be another reason the Fed is cautious towards further rate hikes. The greenback appreciated against its major peers following the employment report and then extended its gains after the ISM Manufacturing PMI for March entered the expansionary territory, suggesting that the global headwinds that have weighed on the sector in recent months may soon begin to dissipate. While these developments are encouraging, given Yellen's emphasis on international risks, they do little to affect the pace of near-term Fed rate hikes in our view. We believe that an improvement in the global scene and more robust US data are needed before the FOMC is comfortable to make another rate move. Therefore, until that happens, we will stick to our guns and support that the Fed is likely to hike only once this year, and that September and December appear to be the most likely candidates for such a move. As for today's highlights, during the European day, we get the UK Construction PMI for March and expectations are for a slight decline. However, given that the manufacturing PMI rose on Friday and that expectations for the services index are for a rise too, we see the likelihood for an improvement here as well. This could support somewhat the pound at the release, but given the recent tumble, we would treat something like that as a corrective move before the next negative leg. In the US, factory orders are forecast to have fallen sharply in February, a turnaround from January. Bearing in mind the strong correlation between this indicator and durable goods orders, which plunged in the same month, we expect factory orders to follow suit, something that may extend the dollar's recent losses. We have two speakers on today's agenda, Bank of Canada Governor Stephen Poloz and Boston Fed President Eric Rosengren. As for the rest of the week, on Tuesday, the Reserve Bank of Australia will meet to decide on monetary policy. The market expects officials to stand pat amidst an improving domestic environment, but to maintain their easing bias. We view the risks to the currency as tidal to the downside, at least for this meeting. Aussie appreciated around 7% in March, which may not sit well with many bank officials, as they could see it as a drag on economic growth. Against this backdrop, we believe that the RBA is likely to strengthen its verbal guidance by emphasizing that it prefers a weaker Aussie moving forward. In such an event, we could see Aussie reversing some of its March gains on the announcement. On Wednesday, the FOMC will release the minutes from its March policy meeting, where the committee remained on hold and reduced by half its median Fed fund rate forecast for 2016. Given that following the meeting, many officials made themselves clear on how the Fed should proceed, we believe that the meeting minutes may provide little extra information and thus have limited market impact. On Thursday, the ECB will release the minutes of its March policy meeting, where officials introduced an easing package much more aggressive than market expectations. While the minutes of the Governing Council usually do not impact the euro significantly, given the magnitude of the latest easing measures, it could be interesting to see to what extent officials supported those measures and how open they are to even further action. Finally, on Friday, we get the UK industrial production for February, and expectations are for the figure to have stagnated from the previous month. The manufacturing PMI tumbled to a 34-month low in the same month, driven by weakness in both domestic and foreign demand, which somewhat supports the forecast. From Canada, we get the employment report for March. The unemployment rate is expected to have remained unchanged, while the net change in employment is forecast to have turned positive after 2 consecutive months of declines. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.